Hello, and welcome to the second part of our markets review brought to you this weekend by SG Futures. The second part is going to feature our regular slot, which is a full rundown of the US markets that we typically trade day to day. So, as usual, we're going to cover off our E-Mini S&P as our core market. We'll have a brief look at the Nasdaq, and then we will finish up on the Russell 2000. So without further ado, let's just properly get into it. We came in this week and we talked in, I think it was in last week's video, around the bullish narrative was very much unchanged coming into this week. We felt that there was an opportunity to maybe go higher, but there was a little bit of poor structure below us that we could expect to be repaired. Monday was a real example of some price action that just confirmed that we were on the fence around that. So Monday's candle in here, we're looking at a daily cash session candlestick chart in here. So these candles are all just the cash sessions, so nothing from Globex. So on Monday we had pretty much a doji candle, which just represents complete indecision, which is telling us that the market doesn't really know whether it wants to go higher or lower. And what we saw on Tuesday was we saw a little bit of a gap to the downside, and then we closed over and above Monday's high, which is pretty nice. And then on Wednesday, we failed, and we mentioned this on Twitter at the time, we failed to get above what we deemed to be a pretty key level, which was 37.20. Now, we never even got near 37.20. We were probably about 12 or 13 handles off it, I think, in total. And what we saw on Wednesday was what you would call a liquidation break. And this is different to regular selling and selling pressure from all time frames. This is just people who got long at bad positions and are just getting out. And there was a lot of emotion involved in that. What we will see in the market profile, when we get into it in a few minutes, is we'll see some single prints, which will be areas that we will look at this week, if and when we get up back into these levels in here. And then on Thursday and Friday, we pretty much had a little bit of balance. Just digesting the move lower, we had an overlapping range into Wednesday's range, and the same, relatively enough the same on Friday. And on Friday, what's interesting is we've come off the and shown support in and around the 20-day moving average, which is what we'd expect in a market that's not selling off in a big way. So the market pretty much did as we expected. When we failed at the highs up here, which was, I think the high was 37.10, if I'm correct. So we were probably about 10 handles shy of what we would deem to be a key level of 37.20. So we didn't get there. We're automatically thinking that we're going to start testing some lows, and those lows would be down here from the previous week. Sort of around the 36.40, and heaven forbid we would get down and look at the sort of 36.20, 3600 sort of levels that we might potentially see. But we expected if we sold off that we would find some buyers at some point down here, and we would hopefully find some support around the 20-day moving average, which is exactly what we saw. So coming in next week, we could say that there are a couple of risk events on the table, and we talked about this in our video on the DAX on Friday. And we would treat this weekend as a bit of a risk weekend, in that it's really the pointy end of the Brexit negotiations, and there may be a little bit of volatility around the euro, and the euro dollar would be one of the most liquid forex markets, and any significant volatility in the euro will affect the dollar. We're not completely protected and isolated from that trading US markets, but there is the possibility that if there's a violent move in the euro, that we may see a corresponding move in the dollar. So that's always going to be at the back of our minds, and we need to sort of plan and prepare for that. If the euro were to sell off significantly, you may see a blip up in the dollar index, and an increase in the dollar. What does that do to gold? What does that do to our indices? So these are the things we sort of need to plan for as we come into this week. I think it's highly unlikely that it happens, but again, it's always better to plan just in case the worst does happen. And ultimately, what's happening at a high level here is, for anyone based in the US, what these negotiations are all about, and what the bigger picture is that if the EU or Europe is seen to give too much as part of a withdrawal agreement, it paves the way for potentially other member states to leave the customs union and what that ultimately might do to the euro as a currency in the long term. So they're the sort of things we're thinking about. We're not getting obsessed with the news or anything like that. We're just having we're just trying to make preparations just in case the euro does sell off quite heavily. So what we're going to do is we're going to have a quick look at the market profile from a weekly point of view. So coming into our weekly market profile chart, as always, I'm just going to mark it off in here as the week that we're looking at this week. So we can see that we have filled in the gap from last week. So we had, let me just mark this off in here, we had a little bit of a gap in here and some single prints. So on Thursday and Friday of last week, we filled in this gap, which is, for any people who've got OCD for market profile, that's a really nice thing to happen. That means we've got better structure for a leg higher. Of course, we have some poor structure down here. We have some further poor structure down here and down here. But this just tells us, the fact that we haven't filled in any of this down here just tells us that we're in pretty bullish frame of mind at the moment. But we're just mindful of it just in case price does get back down here. But as we've traded over the course of this week, we've seen very high volume and time nodes up here and up in around the sort of 3,700 mark, and we failed to break higher. So what I have marked off on the chart in here is I have marked off the weekly value area high, which is 3,700. The weekly VPOC, which is 3668.5. I haven't got a marked perfect in here, but it's 3668.5. And then the value area low, which is 3660. Now, 3660 is proving to be quite an important level from an order flow point of view. So if you sit and watch a adaptive market or a market ladder all day long, you'll see how price reacts in and around the 3660 mark. The tempo seems to kind of increase a little bit. It seems like it's an area that the market is placing some importance on. So it's a level that we're going to be mindful as we come into next week. So what we have seen this week is this is our closing price in here. So I think we closed in around the 36.53 mark on Friday. And we've closed in the lower half of value. So what that's telling us is if we look at the previous week for context, we had a value area spanning from sort of 36.94 all the way down to 36.44. It's about a 50 handle value area. And this week we're pretty much overlapping in value. So value tells us when we spend time and transact volume, that means that there's agreement between buyers and sellers. So the prices are fair. So when we see a break below and a close below the value area, it's telling us that there is potential for some further downside coming into next week. So of course we're going to keep an eye on the futures on this evening and see how they open and see what if any news over the weekend is contributing to any sort of a bullish narrative or a bearish narrative, and we'll see how the sort of 12-13 hour Globex period goes before we start getting a proper view on where things are going to go in a cash session point of view. So we're just mindful that we've closed in the lower half of value, and we are opening the door to some of these levels down here potentially. And I think it would be good for market structure if we were to go down and repair this particular gap down here. I think it is particularly important. It is so important. I'm actually going to mark off a level down here, which we think the market should hopefully get down to and trade. And we're going to mark it off as 35.81. So these are the sort of ranges that we're taking off our weekly profile. And as we jump into our daily profile, this is what we're faced with. So we can see we've marked off the levels again from a weekly value area high up here, our weekly volume point of control, and our weekly value area low down here. So what is interesting, like what the story is of this week, is that on Monday we opened up and our value was overlapping with Friday's value. So it tells us there's acceptance between buyers and sellers. On Tuesday, we have overlapping value, but we made an attempt at a break higher and we closed above the two ranges previous, which tells us that there's a good chance we're going to test some highs. And if we test some highs and fail, then maybe we're going to start looking at the other side of balance, which will be sort of down here. And that's exactly what happened. So really on Wednesday, whilst we had overlapping value on Wednesday, granted it's in the lower half of the value structure, we closed right down below the full daily ranges of the previous 3 days. So from Tuesday, Monday, and the previous Friday we closed below that. So it's kind of telling us that there is no acceptance up here, and the market is looking to explore some of these areas down here to find a more convicted buyer, or someone who's going to step in and drive the market higher. Obviously not one person, but a number of buyers who are going to drive the market higher. And then when we came in on Friday, we sold off a little bit, and we printed some, there are some lows that look like they're potentially going to be taken out in the future, and this is why we come in this week with a little bit more of a bearish viewpoint than we would normally have. We think we might be bearish early in the week and maybe close more bullish, but it is telling us that there is some structure down here that the market is looking to potentially repair. When we get into the market profile properly from a daily point of view, we can see why that there are some levels down here which are important. So that's the story of last week, and as we come into this week, these are the sort of core levels we need to break above from a bullish point of view. So the first one will be 3660, then 3669, and then 3700. Ultimately, the market will be aiming for 3720, which is up here, and a break and close above that. So there's a good 70, 80 handles involved in getting that higher, and that could happen over the course of a couple of days if we get the right sort of momentum. So when we look at our daily profile chart, and I'm not going to get into too much over the course of the whole week, but we're going to just spend a little bit of time talking about Friday. This is Friday in here, so from our A period in here, you can see it here. And what we've seen coming in on Friday was really, really interesting. So in these small letters in here, in these TPLs, this is the Globex session, and we have a number of single prints in here, which typically we wouldn't pay too much attention to, but there was a bit of emotion involved in this. I think there was quite a significant move in the European markets, and the US futures just sort of followed suit, which would typically happen, but there was emotion in this. We never really got back during Globex into testing these levels. But we can see we were given an indication pretty early on Friday who was in the market. So we could see in B period here that we came pretty much 3 ticks from filling in the singles, and it's telling us that these are very, very technical traders who are in the room. If there is the other time frame in here, they wouldn't be paying attention to single prints in a Globex session. They're not really bothered with that. So it's telling us that there's probably likely to be weak hands in the room, and that's something that we would carry forward and we would keep in our minds as we're trading the particular trading day. But what's really important is the low that got put in during Globex down here is 36.20.75, and what this actually corresponds with is it comes off in a given that futures trade around the clock, it's pretty much a 24-hour market. This came off the 20-day moving average down here, and what was frustrating, if you've got OCD for market profile like I do, is in F and G period we had a look at the lows, we didn't get down there in F, and then in G we had 1 tick of excess, which basically tells us it's an unfinished auction, and there's a good chance that the market will want to come back and repair that auction, and also it may want to come back and retest anything below 36.20. So that's starting to tell us that there is a potential for some bearishness, like not crazy bearishness, but just some potential for some downside. What we also have down here as a key level is that we have a virgin VPOC down here, so an untouched volume point of control, and that's again another level we would look at down here. So maybe if we were trying to buy any dips next week, if our internals were telling us that things weren't overly bearish, or there wasn't any sort of major heavy selling going on, this might be an area where we might buy some dips, and we could maybe place our stop relatively close to where we entered, for example. But we would like to see this auction be repaired as we come in next week. Then on the other side of this, what's really, really interesting is on Friday, in the afternoon, we got a pretty decent rally. So like things went up pretty hard, but we stopped shy of this 36.60 level, and we also printed a poor high. Now, granted, this is in literally the last sort of 30-40 minutes of the day, where there's a good chance, given that we've come off a good sort of 50-60 handles over the course of the week, there might be some shorts who are just taking some profit in here, and as the market's going back up, they could just be trying to get out at any price, and that could be driving the market higher. So that could be what's happening in there. So we would again treat this auction up here as unfinished, and there is the potential to come back and repair that, and we'd like to see that repaired during regular trading hours, i.e. in a cash session. So from a cash session point of view, if we open in last week's full weekly value area, I think there's every opportunity that we start to test some levels up in and around the sort of 3700s and higher, and test some highs up here. Put that in here. I think that's a level we'll look at. And if we open in the value area low of last week, I think there's a pretty distinct possibility that we come down and we potentially repair this whole area down here. And we'd like to see some sort of move down here where we get a decent amount of excess before going back up. To the downside, there is a significant level down here, and it's roughly the 3581. So mark it in here. It's an area that we would look to buy a dip there, and we put a pretty decent size stop on it. I think there's a number of traders in the market who would love to see a retracement back down here, and to get long from down here, because it's going to repair an awful lot of really poor structure that's above us. Finally, just before we move on to the Nasdaq and the Russell 2000, we just want to mention there is a couple of areas up here which I forgot to mention just a minute ago. Is we have some single prints, and these will be some. Let me just mark this off, fill it in so you can see it. We have some single prints up here, and it's between sort of 36.86 and 36.89. We would treat this as a gap in the market. Single prints usually tell us that there is a degree of emotion with the buying or the selling, and the auctions and the prices aren't auctioned properly, or the auction is incomplete. So we treat it in a similar way to a poor high or a poor low. So we would look at how price action responds to these areas in here. Now, there are algos out there who will just blindly sell 36.86 when it gets back up there, and the first move up here could, and often I've seen this, come one tick away. So 36.85, 75, and that could be the first move up there. It could be rejection there, potentially. So we would look out for that. But if we get through these singles, I think there's a good chance I think that's a pretty bullish statement if we get over and above that. And I think there's a good chance we break 3700 and then 3720 and beyond. Typically this time of year, I think there's only really been 1 or 2 years in the last sort of 10 or 12 years where the E-Mini S&P has had a down month. So it's incredibly rare to see a high degree of selling during this month. So this is something that we would say would be in our favor from a longer term bullish point of view as we progress through the month. So let's have a quick look at Nasdaq. Nasdaq, a little bit of a nothing week last week. Not a huge amount happened. Let's grab this in here. On Monday, we had a relatively bullish day. Tuesday the same, and then Wednesday actually the liquidation break in the Nasdaq actually, I think it dragged the other markets down. And then on Thursday and Friday, we've come off the 20-day moving average, and we're generally in an okay place in here. I think a break above the sort of 12,400 would be positive. I think the previous all-time high up here of 124.35 I think is the level, or 124.40. I think a break above that would send us up towards some further all-time highs. I think that is a significant level that we look out for this week. To the downside, we have this big sort of area of balance in here, depending on where you draw your lines from. Just mark this off. I'm going to actually just include a little bit more in this. I think that's one big area of balance. I think if we get back down in here, we test some lows down in there. I think it's highly unlikely, but if we do, I think if we do break the 20-day moving average, we obviously target the 50, and then this is sort of short-term dip buying area down here around the 11,700. That's if we get down there, and I don't think we do. So really what we'd look to see is a break above this sort of level next week. And if we can get over and above that, obviously 12,500, nice round number. I think that'll be a further line in the sand for the Nasdaq to break above, but nothing hugely concerning. I think what's actually happening with the Nasdaq at the moment is tremendously positive. I think this has just been such a rocket ship of a market for the last 2 or 3 years, and seeing decent pullbacks like this with the move from growth stocks into value stocks, I think this is positive for this market. Seeing a bit of downside like this or a bit of consolidation, it is positive for any sort of move higher. And when we see these types of things, they actually give us a bit more confidence in going long. So let's have a look at our Russell 2000 just to wrap up. And the Russell, as we said in previous weeks, this has been the real outlier market across the main US markets that we trade. We don't really talk too much about the Dow, but this is the sort of third market that we're sort of in and out of from a daily trading point of view. And over the course of this week, we've had the indecision on Monday, ramp higher on Tuesday, sell off on Wednesday, but not a huge sell-off. And then Thursday and Friday were pretty much in balance. So much so that you could almost just wrap a box around that and say that is a period of balance. And if we fail at the highs, we test some lows. We also have in here, we have a pretty low volume node in here, which is kind of an area that we would maybe like to see retested. I think there's a degree of emotion in this particular big green candle in here. I think there's a degree of emotion in that, and we would like to potentially see a retest of these sort of areas down here and the sort of 1850 mark. I think if we actually break below support of this particular balance area, we actually test these levels down here, which would be like 1821, maybe the previous all-time high 1819 or 1820. I think they're the sort of levels that we test from above if we do get a break out lower. But I think if we break above this level up here, we take the high to the low and then we double it up here to give us some areas to go to. I think there's definite possibility that we break above 2000 before the end of the year if we get the right sort of bullish momentum across this market. I do feel this market is very overextended, and I think we are due a pullback, and I think it would be healthy to pull back first before we move higher. But then again, I don't have any say in what actually happens. I just have to sort of trade what's in front of me. So that brings us to a close for our US markets perspective this week. As always, drop us a note in the comments if you've got any questions. Visit our website, sgfutures.com, if you want to learn a bit more about market profile. And otherwise, have a great trading week. Talk to you later.